right, what is up, everybody? Welcome into today's edition of In the Game. I'm your host, Hustle, and as always, we're going to be diving into the crypto gaming markets more so. I want to talk about the big flaw in the industry, and one thing I get asked probably more than anything in this space. Johnny, how do I evaluate tokenomics behind these projects whenever there's so much differentials in the market caps, fully diluted, circulating supply? What does this all mean? Where can I find the information to actually lock in and study these tokenomics on my own? I'm going to give you the tools in this video to go into these crypto gaming projects. And we'll talk about why I mean crypto gaming projects specifically and go in and exactly find when the token unlocks are, when seed, pre-seed, and all those tokens are unlocked and potentially going to be distributed to the marketplace and potentially sold, which does cause these unlock dips. I'm going to give you all those tips and more. If you enjoy the video, be sure to like the video down below and subscribe to the channel for more shows here every single day on Crypto Banter. Quick shout out to our sponsors. Animoca Brands, the biggest Web3 gaming company in the world. Myria, one of the leading studios and L2 solutions in the space. Unix Gaming, one of the leading infrastructures in all of GameFi. MEXC, the official exchange of the In the Game show. And SpinTop, the official GameFi index of the In the Game show. Let's go ahead and dive right in. We're not going to talk about the markets up front. I want to talk about crypto gaming tokenomics, guys. So obviously, we had the titans in the industry at the very beginning that came in and absolutely swept the space, right? Throughout the last bear, we saw last bear market, from May 2020, June 2021, all the way up until the height of the bull run. We saw play to earn projects, even with flawed tokenomics, absolutely flying. Got up to $160 here on MEXC. And why do I say flawed tokenomics? Well, you look at the market cap; it's a $600 million market cap. The fully diluted is still 3 times that market cap. Why is that? Why so big of a differential? Well, just on the base level, we can go in right now and see that there's only 37% of the circulating supply out there right now. So there's a max supply number and there's a circulating supply number. And whenever there's so much of a difference in those numbers, that means there's potentially a lot of unlocks, a lot of distribution between seed rounds, pre-seed, and all these different funding rounds that get returned back to investors, which in a bear market, you have to understand most of the time, VCs, investors, smart money, advisors, whoever they are that invest in these projects that get those distributions, most of them are liquidating these positions for cash, right? So you need to understand where to look for these things. And, with a flaw in the industry, right? I mean, MEXC, Dayton Arena, we have SLP from MEXC. These charts basically look like rug pulls. And it's unfortunate to see that this was the initial setup with these tokenomics, right? Burn mechanisms and, all this stuff, the 2 token economies. I'm going to talk about what to look for, what not to look for, and where to source this information. So let's go ahead and dive right into it. So like when you're looking through your market, your watch list, always build your watch list on project quality. But then you need to look at the tokenomics on every single thing you invest in. I think it's super important unless they are fully vested or unless it is something like, let's just say Polygon, where the market cap and fully diluted actually aren't that different. So it doesn't really have that much downside VC potential. Let's talk about a couple of examples of projects that I'm super bullish on. I want to make it very clear, first and foremost. I am so bullish on each of these platforms and projects for years to come. But there are tokenomics issues or tokenomics, details that we can point out and make examples of to kind of make you look out and be sharper across the entire market. So just keep that in mind. I love all of these projects. I think Immutable is one of the best projects in the space. But there's a total, as you see here, of 2 billion IMX tokens. Digital Worlds NFTs is the issuer of IMX token, and it will distribute in the following areas: ecosystem, project development, token sales, and foundation reserve. But you can never just go off of this, guys. Never just go off of this. Head over to the white paper, head over to page 12 on the white paper, and you'll be able to see here where those are distributed, right? So we actually just started the unlock sequence for Immutable just a couple months ago. The token launch, let's see, just the tracking data, I believe this launched in November or December of last year, if I'm not mistaken, somewhere around that time period. And we're seeing the investors are getting tons and tons and tons of IMX tokens over the next couple of years. And even GameStop, who received an IMX grant, they dumped every single token. It's just not a very strong outlook for the tokenomics, for the schedule of the unlocks. So like on the website, you see token sales, public and private, are only 19%. But the problem with that is that 19% is, first of all, accounting for 2 billion tokens. That's a lot of capital, a lot of liquidity that's in that 20%. And then second of all, it's unlocking every single month here. Robbie and the team are doing everything possible to kind of prevent the dumps, try to lock up tokens in the ecosystem and stuff like that. But at the end of the day, when you redistribute it to investors, they can do what they want. It's an open market. And as mentioned, it's a bear market. A lot of people want to secure liquidity in these time periods to be able to then accumulate at their levels of DCA, comfort, whatever it is. So that's just one example. Always check out the whitelist. Always check out the distributions, because the schedule of release is so much more important than like this, for example. Obviously, great. 50% is going to ecosystem development. But we've also seen the developer grants that can be dumped from that, right? You have to read between the fine lines, always check out the white paper, and look at the distribution schedules. And how can you find more about distribution schedules without really digging that deep into every single white paper? Head over to token.unlocks.app, and you'll actually be able to see all the upcoming unlocks in the space. This is an incredible platform to use to see what unlocks are around the corner, when you can look for potential either dips in tokens, where you can then accumulate at a better price if the unlocks are slowing down, etc. Or if you're like a trader, most of the time, these are really good opportunities potentially for short traders in the market. Whenever you get a good unlock on a huge project, most of the time there is a bit of a dip. We saw it play out with MEXC last month. We're seeing it potentially play out. We saw it play out with IMX's last unlock, and we potentially could see it play out once again. But this is a great tracker to be able to actually go in here and check those things. And it puts it in one central location, right? And this is never financial advice, guys, but this is always something to take a look at, because typically speaking, most unlocks, the token goes down. I mean, MEXC had an unlock about a month ago, and it has completely tumbled from $9 all the way down to $6.50. And I think that's not done because of the 37% circulating, for example, right? So you could go in here, just to give you examples, you could go in, type in AXS, we got MEXC Infinity, and we'll actually be able to go in, check MEXC Infinity. Their next unlock event will be in 55 days. They have 32% remaining unlocked, and then remaining locked tokens of about 86.5 million tokens. So, there's a lot of tokens on the horizon for stuff like MEXC, for stuff like Immutable. As you can see here, the dashboard that gives you all of the information. 61% of their tokens are still locked. The next unlock event is in 4 days. There is a linear unlock of this amount per day, 662,000 within the ecosystem development. It gives you all that info and more sourced in one spot. So I think that's critical. So number one, token unlock schedule and distribution. That's huge. Now let's talk about max supply versus circulating supply, fully diluted market cap versus market cap. What does that all mean for my investment? Okay, so let's take a look at this. So kind of the similar example. It goes right hand in hand with the unlocks. You can take a look at these market caps. You can take a look in the fact that only 7 billion Gala tokens are circulating. That's only about 20% of the total tokens. There's still 80% of the token supply still to hit the market over time. Stuff like Illuvium, very bullish on both of these projects. But Illuvium only has 17% circulating right now, and you can go look at their schedule. The amount of seed, pre-seed, launch pad, and between the pools, which a lot of people do sell the rewards, it's really hard to see stuff like this having a little breath of life in markets that are just going to be treacherous in these times, like a bear market. Nothing like with tokenomics unlocks like this, like AXS, IMX, ILV, these types of tokens. It's going to be really hard to see some positive momentum in any market that's not really just a catastrophic bull run with these types of tokenomics. So I think it's really critical, no matter how big your conviction, no matter how much you believe in a project, to go in and actually figure out, like, what is the downside risk here, right? This is just way too much to swallow. And when you're talking about 83% of the token supply still to hit the market, and the difference of the fully diluted and the normal market cap being about 5 to 6x. I think it's about 6x in this instance, right? So I would assume that the downside here as a downside versus upside in the short term, for sure, the downside is way higher than what your upside potential can be here, especially when those ecosystem tokens unlock in the seed and the pre-seed. So these are the type of things you always want to find out what's unlocking, what is the percentage between investors and, seed, launchpad, team, treasury, project development. But you also want to go in and see, like, even if after this dip, it dips, like after the unlock, it dips, there's still 80% of the tokens to unlock here, for example. So there's a lot of downside risk with projects with these types of tokenomics. Now, it makes complete sense. We were set up in this industry, not a setup in a bad way. They set us up. Axie Infinity, they set the staple in the space, and they set the staple of how tokenomics are. And a lot of projects copied their tokenomics. So, things to look like, really red flags. Burn mechanisms. Number one, red flag. If you have a burn mechanism on your token, unless it is because it's its own blockchain and it is burning its token on its own blockchain, Avalanche, Polygon, Ethereum, every blockchain that you can use on MetaMask, for example, unless it is just strictly burning its own token, using it for gas, not some weird, every time they sell X tokens, we burn this amount of tokens to keep the ecosystem stable. No. Burn mechanisms have led to some of the worst flaws in the space. We saw it with Pegasus. We've seen it with a lot of different projects, especially in crypto gaming. So burn mechanism is usually only in place to instill confidence for investors, to kind of feel like their investment's stable and to keep them involved. It's like the opposite of a FOMO tactic. It's like a hook and grapple tactic. They keep you involved by actually putting these burn mechanisms in place and making you think it's going to have some sort of positive momentum, when in reality, it's just a ploy to try to prop up the token price for so much longer, because they know there's already flaws in the system. If they're having to implement burn mechanics, there's already a problem. Number two token economics. No go for me. Unless it is a super well thought out system, well done white paper. Two token systems, for the most part, means that one of the tokens, at least one of them, is being used only for yield, right? Axie Infinity and Smooth Love Potion, perfect example. SLP was used strictly for yield. And if there's a token only being used to pay people, there is no way in hell that token is going to have positive momentum over time. And that just makes sense. That is a Ponzi scheme at the end of the day. If all the momentum is people getting into the economy, we've seen it with Pegasus. We saw it with Kribata. We saw it with, SLP. We've seen it with a lot of games. And it's unfortunate. But they were like Ponzi-nomics, based on user onboarding and based on the fact of FOMO, hoping that the people thought they could keep making the money they could. Meanwhile, once the user acquisition stopped, people really start selling their tokens, loses momentum very fast, right? All those printed tokens into the economy, it's just like the US economy, right? They're making our dollars worthless over here right now. And it's the same thing that these, printers inside of these Web3 gaming economies set up for us. And it's unfortunate. But there are projects with fantastic tokenomics, and I just gave you the tools, the red flags, and the biggest things to look at when you're looking at crypto gaming tokenomics, guys, because one thing I know for certain is this industry is not going to rely on, I'm hopping off the game today to make $100, right? And that's where we started. And now we're moving on. We have a much better approach, free to play, not so much based on the earnings. NFTs as earnings, skins, weapons, items, assets. I've preached that for so long. It should never be a token that's paying out somebody. It should be an unlock, level up, a purchase in the app store, a battle pass. Those types of things should be the NFTs that you are earning inside of the game. We should not rely on tokens to pay people. We should always keep our eyes out. Use solid apps like tokenunlocks.app, because this thing is a lifesaver when you're looking to try to get, the edge on the market and figure out, when these next events are, when the unlock is coming. I mean, this is a 1% supply unlock almost coming up for IMX. It's very valuable, very valuable information to know. And I'll be here to provide more for you here in the future on In the Game. Last but not least, we ran a giveaway last week here on the show for the Azuki, Bybit, and Red Bull Racing NFTs. I will draw the winners today on the giveaway page. So a few hours from now, I'll go in, I'll confirm, I'll pick the winners. We haven't picked winners yet. and you'll probably be notified. You'll either get like an email or you'll get some sort of notification, or just check the page if you entered later today to see if you win the giveaway, guys. So as always, I'll be back later this week. I'm going to check out the CentralCon here in Miami. If you are in town, hit me up on Twitter. I'd love to meet up with you here in Miami at the Decentral NFT conference here in town this week. I'll be there today and tomorrow, and I will check you guys on the next show on Wednesday. As always, play well, my friends.
Mm-hmm.